Hello guys, glad to have you on board again today. We're Thursday, so we're going to do, we've already been doing this in the past, so this shouldn't be a big discovery for you guys. We're going to do an intraday kind of grid setup in which we're going to highlight most of the major indices. So we've got the Euro stocks in here, the German DAX, the FTSE, the Nasdaq, SPX, and Dow Jones for the US, and the major forexes like USD, JPY, and Eurodollar, so we can cover up the three major currencies eventually if something interesting shows up. We're just going to erase everything else just to gain a little bit of space in here. I know that you guys who are going to be watching this from your phones, I already had the feedbacks from you guys saying, telling me that the 8 grade stuff isn't really manageable on a portable device, but still, I mean, you know you can zoom in into video, and anyway, I'll try zooming into a single chart whenever things will be interesting. But in here, I'm here to teach you a method. Something to do if you want to do this kind of grade setup, in which we do just like we will do on Tuesdays when you analyze a single asset and try to take advantage of the possibilities given by this one. In here, we're just going to do the same old stuff, same thing, but just we're going to try to add a little bit of spices on top of this, in which we're going to just, instead of watching a single chart, we're going to have a look at 8 charts to figure out among the 8 charts, which are heavily correlated. I mean, most of those indices will pretty much have the same context most of the time, not to say almost every time. So we're just going to try figuring out among those positive correlations we have, which one is going to be the best vector to use in order to buy or sell, the context we've highlighted. So all the 6 things you've got in here on the left corner is basically all indices, so they should be moving all together, and you've got those 2 who probably will move separately, but still they can be interesting anyway. So what we do is, among those 6, we're just trying to figure out which one, or which ones, no more than 2, will be the most attractive ones to follow the ongoing scenario. So first of all, we have a look at this, and we just need to figure out what the fuck is happening. So what the context is on those charts, pure and simply. So we need to contextualize this. So have a broad look and tell me what the hell is this. So if you need more information, you can zoom out on in, or you can zoom in on someone. On some of these charts, or you can just have a broad look at what this looks like. If this doesn't ring a bell, then you zoom on one. Let's zoom up. Normally you should be zooming at the biggest ones, so I'd suggest you look at the SPX, the most liquid one, and we just try to contextualize this. All right. So remember that on this setup, the things that are really important is that you shouldn't focus on the price. You should focus on price movements to figure out who's the most interesting, which asset is the most interesting, and then you're going to make your analysis, step 1, 2, and 3, on this asset, obviously. Because that's what you need to do. You don't trade of what you think or whatever, you trade what you see. So what we do, I think this is yesterday's candle close. Yeah, it's previous close value. And what's important is to see where we are between the extreme channels. So remember that the extreme channel is the position of the broader picture's context. All right, so our context is in here, trend channel is there, and this is the context of the higher time frame. So we're right in the fucking middle. So this is probably a range anyway, and it really looks like that. It's freakingly brutal in terms of price action. So we could say, yes, definitely probably a range at play in here. How mature is that range? Then this is the good question. So what you're going to do is applying the goddamn strategy as usual. You're going to try figuring out where the hell we had range boundaries. I would say there. Anytime we've managed to get context to context, so oh my goodness, that's pretty much a fucking weird range. But still, I would say one in here, one in here, one in here, and we're trying to build one in there. So what the hell does that look like? Moreover, we have 13 fucking boundaries in that range, so very mature, very dangerous. We're gonna have a breakout at some point. So we need to figure out if we do have something to exploit in here for potential breakout. We would favor this range to the downside. As we can see, we're pretty much lower than the beginning of this range, so it's most likely a bearish range orientation. We have no more informations like no diamonds. The latest diamonds we had was in here, and it was a bearish diamond, so we should favor the selling entries on that range, but still This one is pretty late stage. It was on the 15th and on the 23rd. So it's pretty late right now to use this signal, but still, all right? So we favor some bearishness in here in terms of potential inside this range, but still, it is range. What we could see is that we've got this. Remember that this is the kind of information you want to highlight pretty rapidly when you've got two rectangles, which is, remember, just as a reminder, these kind of signals, the crosses, means you need to have an oversight of the context to identify if this breakout is a range breakout, standard breakout, or if this is a trending breakout, all right? So this one, you need to contextualize the signal. Those ones, generally range breakouts, most likely, so you don't give a shit. But they have way more importance when you get two in a row in opposite direction, which means one is on top of prices, one is below prices. And when you've got these two showing up, one after the other, means the range is mature. We tried up, we tried down, and we don't know where the fuck to go. So normally, that's a sign of maturity inside a range, which means in here, not even looking at the prices, I can tell that something has been priced in here, and the fact that we're going down today means something. That doesn't mean we need to follow this blindly. All it says is that we were trading this area, and for now we decided to go bearish according to the bearish bias we've put it before. So we favor bearishness. We do have some early bearish breakout signals. Still, we have no breakout in terms of sine wave, so it is hard to know what the hell this is. What the hell are we facing? We could be having early signals of a bearish breakout to come over. That doesn't mean it will. All it says is that I think there is a risk management to do out of this previous range. So I would say the only information I can take out of this is that there is an obvious stop loss to put. So I think in here you can put a stop loss. We want to favor sellings. That's what we've chosen. That doesn't mean it's the best choice. There is always two choices in a range. You can be bullish or bearish. You can be both. The thing is that in here, regarding what I see, I think we need to favor bearishness because that's the technical indications, and the latest information suggests if the bulls wanted to take it over, they would have broken this range to the upside instead of to the downside. So it shows some bulls weaknesses. We're going to try exploiting this with a decent risk-reward ratio and a strategy. And in that kind of context, we know what we're going to do today. We're going to search for whatever asset has the best bearish potential to exploit today. All right, so now let's go back to our grid. We decided we would sell. That's a choice. Once again, standard choice. Someday you'll do the right choice. Some other day you'll do the bad choice. But the goal in here is to, whatever choice you take, what really is going to bring the gain is using the advantage of shorting the weakest and buying the strongest, which means by doing this on top of the usual strategy that we'll do on Tuesdays, in here you're going to limit the risk a little bit better because you're going to just search for whichever asset is the most reliable to use and apply your strategy. But in here, let's be clear, again, look at that. The two rectangles, two rectangles, two rectangles, two rectangles on opposite sides. It is definitely mature ranging that we're breaking down on most of those assets. FTSE is breaking down, NASDAQ is breaking down, SPX is breaking down, Dow Jones is breaking down, DAX is breaking down as well. So what the fuck is this? It definitely looks like we're trying to break down. We have gaps, so I think we should favor the downside. Now, how do you pick up the lowest risk asset to play those breakdowns? I would say just look at who are the signals you've got. All right, the price signals, they're all breaking down, so they're all going to be good opportunities to sell, but which one is going to be the most interesting one? Then you can use multiple ways. I think the most reliable one is to see how positioned we are regarding the bigger picture context, the extreme channel. So in here, we're getting close to, we've got a target, which means it's a good sign. In terms of technical reliability, I would say this one gives us good, decent and very good signals for a breakdown because we already have the breakout target and it's upon the support context, so we might be heading toward this context, could be a good sign. This one, we still haven't been broken out of the range structure, all right? So I would say this one is pretty immature, but that's also the one that will give us the best risk-reward ratios, but I will pass on this one. Regarding everyone, that's the one that is the most late stage, so either it's going to catch up on the others pretty rapidly, or I mean, that's just, this thing is the one that's going to stop you the first if you're wrong. So I wouldn't sell this, all right? The Euro stocks. Regarding the FTSE, sorry, I misunderstood. FTSE has been breaking down. This one could be pretty much interesting, but this one has a much more bullish structure than the others. I mean, in terms of overlying structure, this one seems a little bit more bullish. I mean, look at the structures in prices. Yes, we're breaking it down. Yes, we did have some very nice bearish trades opportunities in here, but we did have the same in here, all right? So bearish bias in the range. So I would say yes, FTSE is also tradable some way. But I would say the weakest at the moment definitely is the DAX. Out of those three, this one has already a breakout target, so this is great. You have something to target. You know that we're probably going to reach out or trying to reach out to this target, so you've got something to head forward for and to manage your risks. Dow Jones, we have a target as well. It's great. We do have a breakout opportunity. We're breaking both context channel and trend channel in here, so we do have a breakout, but we're already at the target. So do you take this trade? I give you a few seconds to think about it. Do you sell a market upon a target? No, you don't, because you don't know. If this is a range breakout, you're going to be fucked up, reversed. So this is not about time to sell this asset, not this one. And I'm going to have to move the fuck out because I want to sell the goddamn DAX, and oh man, it's too late. So, all right, too late. Fuck that. So yeah, DAX is definitely the one you'll be selling this morning, even though it should have been done live. I'm too late right now. So SPX, like we said, not necessarily the best one. This one has been breaking down in here, but without a sine wave target. So I would say in terms of technical efficiency, it is not necessarily the best one in terms of risk limitation. But the NASDAQ, oh man, this one's good. This one has a target. This one is breaking as well. This one is already in the context. So we're already searching for support, and we're pretty much about to break down. We also have the bearish bias opportunity in this range. We have the same range that we've clearly broken down. So this one, technical perspective, just like the DAX, definitely the most reliable vehicles for selling entries today. Selling the DAX, selling the NASDAQ is all you want to do. How do you do this? Because it's pretty fucking late. All right, let's say, all right, you guys are English, so we're gonna pick the NASDAQ as an example in here. I'm gonna explain you what I've done. All right, so now that you highlighted the context, all right, so indices are bearish, you want to follow on with this bearishness, so you decided that among the options you had, you want to favor the NASDAQ and the DAX. You can pick one of those two or just take the two to spread the risk. You're going to sell them. The question is, now you know what you're going to do. You have your bias. You're going to sell today. You need a plan. You just don't sell because you think it's going to go down. You need to sell something. So the thing is, in here we're pretty fucking late stage, because this is where the actual trading signal was on the NASDAQ, which gives you multiple options. Either you take the trade on the late stage and you narrow the trade size, you reduce the position sizing, because the stop loss is going to be broader. The stop loss is definitely there. All right, remember that on a breakout context, you put your stop loss above the previous market swing or below. So in here is where you put your stop loss. So entering in here is pretty fucking expensive. I mean, the stop loss will cost you 1.8%, which is enormous for a breakout. So you can take it, but you're going to have to take this trade on a swing perspective, because you're going to have broader picture targets. So I would say in this kind of context, the NASDAQ, you don't want to trade this in the 15-minute context, but in a 1 hour. And you're going to search for a 1 hour breakout. So you can take a trade later today on a bigger picture context on the NASDAQ. To avoid catching up on the late stage 15-minute breakout, you're just going to try catching up on a mature 1 hour breakout signal that may show up later today. All right, I don't know if this is really clear. Obviously, it's a little bit higher level of difficulty regarding what we do on Tuesdays. Tuesday is simple because you just take one asset, you make the analysis, and period. In here, you're going to have to make a correlation analysis and figure out who's the best vehicle to use to apply the strategy you put it in place. So yes, it's definitely a little bit more difficult, but it's also much better in terms of risk-reward ratio management and money management, because you reduce the risk. Consider this as adding a layer of risk management on top of intraday trades. You're going to have much better results if you can manage to use this strategy on top of the Tuesdays ones. All right? So what do we do with it? We're late stage breakout in here. So like we said, either we're going to take the breakout on a higher time frame with a less aggressive risk management, or we wait for pullbacks. That's the option number 2. That's the one I'll favor today. Meaning that, remember that in a breakout context, you always break out something. So in here, it's clear and simple. We broke this trend line, all right? Broke it down. That's exactly where we broke through context, trend channel, had the breakout signal. So this is a perfect educational breakout signal we've got in here. Absolutely perfect. So stop loss in here, we know about that, all right? So we're clear, we can set it here. I think it's more than appropriate. So stop loss in here, you know where to risk manage, all right? So we know that if you sell right now, it's 1.8%, it's pretty fucking expensive. So what if we just wait for a pullback? We wait for an eventual retest of this trend line, and we're going to try selling in this area. In that perspective, the stop loss is just 1.2, way better. 30% cheaper. I'm definitely on. I mean, if we get back to this area and retest it later today, I'm definitely going to look out for short-term signals. 15-minute signals, probably testing the trend channel of a pullback to the trend channel would kind of make sense. And that's a bet. If the market goes straight line breaking the support, I'm out because I didn't take the trade. If the market makes a pullback, I'm going to have a much better price, definitely. So it's up to you. It depends on your risk management and your risk assessment. If you're a risky trader, you're probably going to take this trade with a larger stop loss. If you are a low risk trader, you're probably going to wait for a pullback, but that also means you're probably going to be left behind. So there's no magic. There's no secret. I don't know what the fucking market is going to do. All I can tell is that these are the options you have. You pick a choice. You make your own decisions. But as long as you respect the strategy, as long as you risk manage, normally you should be long-term profitable. That's all I can tell. The rest is just what you want to do, how aggressive you want to be. The more aggressive, the riskier the trade will be, and the more chances it will be to hit the stop loss instead, all right? So I would be pretty much surprised if this was a false breakout, meaning if we manage to find a support in here, trigger no bearish reactivation signals in here, and get straight to the stop loss area, then I think this stop loss is even a buying entry. So I would say there would be eventually a breakout trade to show up in there. All right? So if I end up being wrong-footed today, and if this market isn't bearish and finds some strong support in this context, then you take your stop loss as a bear. You just went wrong. I mean, the European session breaks down, got invalidated by Wall Street, and in that perspective, I think there is even a good buying entry signal to take. I don't really know. I think it's pretty ugly to take the trades right now. All I would say is that if I had to choose bullish or bearish, I've got much more bearish information in the market at the moment, suggesting if I had to favor one side of the coin, I'll definitely go with the bear one. But that doesn't mean it isn't going to be bullish. All right, you need to pick one and select the one you're going to play today. You don't play both, all right? If you're bullish, you're going to wait for the bears to be invalidated, and you're going to buy the bears invalidations, all right? If you're bearish, then you're going to wait for pullbacks because it's a little bit late stage at the current time, and if you want to take this trade, then it's pure and simple. It's a breakout trade. So if you break out the bulls, then you won the battle. You take the gains, and tomorrow's another day. It's simple as that. Right? You put a scenario in motion. We got to the conclusion, I got to the conclusion that selling would be my favorite in this kind of context. I can't sell right now because it's pretty much late in terms of signal. This is where I would have liked to sell, and we're pretty much fucking far from these current prices. All right? But in here, let's be honest, we had a target, we've gone beyond. So to me, everything is red. There's nothing suggesting the bulls are taking it, are have it in control. More likely they're losing it, and that's definitely the kind of things I want to take advantage of. So any pullback I'll have in there in the NASDAQ, I'm definitely going to sell them. Tiny position sizing, low risk, but I want to sell the NASDAQ today. All right, stop loss is definitely in here. All right, so if we ever get to take down this stop loss, I'm out of the game. All right, I want not that kind of pullback, not acceptable. We shouldn't get back to resistant context. If we clearly are breaking down, then this is probably a 1 hour breakout, which means you can have much bigger targets. If this is in an actual resistance building, and if we break down this context in here, and it's not going to be pretty. Like, look at what we've done. We've got bearish odds in here. We've made context to trend channel to context. If we break down in here, it's a 1 hour breakout that we're going to have, which means the targets can be 1 hour breakdowns. If we break down 1 hour, oh, sorry, I'm not going to go necessarily vertical, but this is what's going to happen. All right, we're going to have a trend. It will be wave 1, 2, wave 3. So you can expect gaps and stuff like that. And we're normally going to have to break down a support. So I think the next target is going to be there. All right, like going in there, putting the divergence in motion. All right, and then we're going to have probably the pullback. So the next target will be probably 6,500 if you take this NASDAQ trade. So as you can see, yes, the risk-reward ratio is important, but the targets are very, very interesting as well. So if you want to take this trade on an intraday basis, then make sure you keep 50% of that trade opened for bigger, much bigger potential targets, because this could also turn down to be a 1 hour breakout just pending. This one is still not yet done. It still has to come. All right, so don't take this one as granted, but if this one shows up, the targets will be much bigger than your 15-minute breakout targets. All right, that's how we'll do it today. I'm totally aware that the current contexts are very tricky for beginners. So once again, if you're just starting over with the strategy, be aware that this isn't going to be easy at the moment. It's even hard for professionals. So I'm having hard times identifying the goddamn markets right now. It's very jittery because of fucking Trump and its Twitter. So it's hard to fucking understand what the hell is going on. So don't blame yourself if you think it's dirty right now, if you think it's complicated. Then let me tell you just one thing. It is for me as well. Pure and simple. All right? So don't blame yourself. It's not the best time to get ahead of market learning. Definitely not. But still, that's how life is. All right? So brace yourself, lower the position sizing according to this underlying risk, and I hope you'll be fine by then. And I mean, this thing is not going to last forever. At some point, the Trump's bullshit is going to come up for him. And at this point, we'll have a nice trade. So if it ever shows up, like I said, keep some trade opens for the bigger picture. If the bulls manage to build a support out here, and if they buy the 1 hour chart support context, then you want to let it go, right? You let the bulls handle those stuff. I don't nearly even think this is the kind of trade I want to buy, but still, if the bulls are holding up, then don't be bear, because you're just going to be proven wrong, right? I think we have it. We've got a timing, interesting timing for bears. I just hope it's not going to be another fucking trap.